Today's market story is becoming a little more hopeful. Yes, the Middle East is still driving volatility, but the late move in oil is giving investors a better message. Brent Crude futures are now around 90.33, well below the intraday panic highs from earlier in the session. That matters because the market is starting to believe the worst-case energy shock may not last forever. President Trump also said the war was already very far ahead of his original timeline, which helped stocks recover into the close. So what does that mean for companies? It means the pressure on costs may be starting to ease. If oil stops racing higher and begins to settle down, transportation firms, manufacturers, airlines, and logistics companies all get a little breathing room. They do not need oil to go all the way back to old lows. They just need prices to become less extreme and more predictable. That kind of stability helps protect margins, improve planning, and support better cash flow over the next few quarters. The macro picture also looks a bit better. The New York Fed said one-year inflation expectations fell to 3.0% in February. Earnings growth expectations slipped to 2.5%, and the expected quit rate dropped to 15.9%, a new series low. In simple terms, people expect inflation to cool a little, workers feel less aggressive about changing jobs, and wage pressure is not getting worse. That is important because it gives companies a more stable backdrop for hiring, borrowing, and investing. There is also a growing sense that policymakers are ready to act if energy prices spike again. Reuters reported that the IEA called for a coordinated release of emergency oil reserves, and G7 officials said they stand ready to support global energy supply if needed. They have not released reserves yet, but the message itself helps. It tells the market that governments are watching closely and may step in if oil becomes too disruptive. That can reduce fear and cap some of the most extreme volatility. At the company level, investors are still rewarding strong execution. Vertiv, Lumentum, Coherent, and EchoStar are set to join the S&P 500, which usually attracts new index fund buying. In healthcare, Novo Nordisk and Hims & Hers moved from conflict toward cooperation, with Novo agreeing to sell Wegovy and Ozempic through Hims' platform while dropping its lawsuit. These stories matter because they show that even in a nervous market, capital is still flowing toward businesses with stronger access, stronger positioning, and better growth visibility. So the better takeaway for tonight is not panic. It is progress. Brent at 90.33 is still elevated, but it is much calmer than a market trapped in full shock mode. Inflation expectations improved, policymakers are signaling support, and stocks found a way to finish stronger as investors looked past the worst headlines. Tomorrow, watch whether bond markets and business sentiment confirm this shift. If they do, this could become more than just a relief bounce. This is not financial advice, but the tone is starting to turn more constructive. I'm Wilson, and I'll see you tomorrow.